Hello all. In this video, we are going to see about the 1-5, that is problem number 5, 110-mark problems. That is normal and abnormal loss. So 110-mark problems, one big problem we are going to see. Two big problem we are going to see. So now, you can this is M.Com problem actually. You can expect this problem in B.Com also. It depends upon the paper setter. So if you understand this particular problem means to the extent possible, you can solve any kind of problem under the process costing. It's very easy to understand. From the following particulars, prepare process Z account showing the that is transfer to process Z at cost from process Y 9,000 units for rupees 27,300. Transfer to finished stock from process Z 8,000 units nil. Materials for 500 for that is 500 rupees value. Labor 6,500 value, and then direct expenses 2,009 value. So units and all have become nil. Now, uh, allowance for normal wastage 8% of units introduced, and then the scrap value is rupee 1 per unit. You are required to prepare two accounts. That is, one is the process Z account, the other one is the normal wastage account. Two accounts you have to prepare. Before carrying forward the solution, just take a screenshot of this problem, and then you just have a look at this problem twice or thrice. Then you will take the problem into your mind. Based on that, we shall work out the solution for this problem. Now, abnormal loss with scrap value. So in this problem, both normal loss, abnormal loss, both will be coming. What is the difference here is you are going to open two accounts. In previous problems, we have opened only one account, process one account or two account or X account or Y account or Z account, whatever it may be. Here we are going to open the abnormal loss account also. Abnormal wastage means abnormal loss. Okay, fine. For each account, 5 marks like that. 5 plus 5, 10. Like that, the scheme of marking will be there. Fine. Now, process that account first we are going to open. So here, at a stretch, we cannot complete all the entry. Okay. So please bear this in your mind. At a stretch, we cannot complete all the entry. See, gradually by seeing the question, we are going to work out slowly. Okay. Fine. Now, debit side. Transfer to process Z at cost from process Y. Here, that is what is the input. So here, while you are writing to input, within bracket, write it as transfer from process Y to Z. Like that you have to write. Okay, to input. How much? That is units, 9,000 units. Amount, 27,300. Cost per unit, 27,300 divided by 9,000. 3 rupees, 3 paisa. Okay, fine. The next one, to materials. For materials and all, you need not calculate the cost per unit. Okay, so directly you can put the value in the amount column. That is the third column itself. Okay, 500. To labor, 6,500 as given in the data. To direct expenses, 2,009 as they have given in the data. Okay, debit side, have we all completed? Well and good. let us come to the credit side. Here, see the question. Allowance for normal wastage, 8% of units introduced. The scrap value is rupee 1 per unit. Okay, so 8% of unit introduced in the sense, how much units have been transferred to the process Z from process Y, right? So that 8% of that input. Okay, so 9,000 into 8%, that is 720. So that you have to put it in the units column, 720 units, and then scrap. The scrap value of scrap value is rupee 1 per unit. So that is cost per unit 1. 720 into 1, 720. Understood? By normal loss account. After then, by abnormal loss account, how you will be working? You have to find value of abnormal loss. Normal cost of normal output divided by normal output into units of abnormal loss. Okay. This is the standard formula for the calculation of abnormal loss. Again, I repeat, value of abnormal loss is equal to normal cost of normal output divided by normal output into units of abnormal loss. Now, first component, normal cost of normal output is equal to expenditure of the process, that is debit side of the process Z account minus scrap value of normal loss. You see, that is 36,309 is the debit side value of the process Z account minus 720. This one is the scrap value of normal loss. So this is what is the scrap value of normal loss. So 36,309 minus 720, you will be arriving at 35,589. The second component, normal output in units, is equal to input units minus normal loss units. Input units, as I told earlier, 9,000 is the input units minus this 720 is the normal loss units. Normal loss 720. Okay. So that is what 9,000 minus 720, which is equal to 8,280. Fine. Abnormal loss units. First you put the formula only. Normal output minus actual output. So as you all know very well, so if the actual output is lesser than the normal output, then it is the abnormal loss only. So if the actual output is greater than the normal output, then it is the abnormal gain. So here if the actual output is lesser than the normal output, in such a situation, it is abnormal loss units only. Okay, normal output as we have calculated already, 8,280 is the normal output minus this one we have to calculate. After then only we can find the difference. Units of abnormal loss, after then only we can find. This one we have to calculate. All of you listen please. Come to the main workings of the problem. Now, here we have completed, see, the debit side fully we have completed, and then credit side we have completed the normal loss. Okay, now by after normal loss, sequentially abnormal loss will be in the credit side of the process account. First information will be the normal loss. Second information will be the abnormal loss. Third information will be the finished product. In the debit side of the process account, first one will be the input. Okay. Second one material. Third one labor. Fourth one, the next one direct expenses. The next one overhead. After the overhead, to abnormal gain. Okay. So here if abnormal gain problem is there means, if the problem is based on the abnormal gain means, here the last information will be the abnormal gain. Okay. So here, coming to the credit side, first one will be normal loss, second one will be abnormal loss, third one will be finished product. So here we have completed the first one already, normal loss we have completed already. Now we are going to calculate the abnormal loss. Here in unit column, we have to calculate this one. Now you see. So all of you listen. For normal loss, units of normal output minus actual output. Here already we have calculated the normal output 8280. Actual output, how we have to calculate here is, you see, transfer to finished stock from process is at 8000. This is what is the actual output. Transfer to finished stock. This is what is the actual output. So now 8280 minus this normal output 8280 minus 8000 actual output, you'll be arriving at 280 is the units of abnormal loss. Now here by abnormal loss account in units column 280 abnormal loss, and then the value of abnormal loss that you have to calculate. So have you calculated all the three components? Now you just substitute. You will be calculating the value of abnormal loss. So normal cost of normal output 35,589 divided by normal output is nothing but 8,280 into units of abnormal loss 280. Check with the calculator. You will be arriving at 1203. So that is the by abnormal loss account in amount column you have to write. So now cost per unit you have to find 1203 divided by 280. You will be 4 rupees 30 paisa is the cost per unit. Fine. Now, what is the balance? So you have now you have to add a debit side units column, debit side amount column. So don't worry about the cost per unit column. So 9,000, 36,309. Okay. Now what is the balance? So 9,000 minus 720 minus 280. You just ensure whether you are getting 8,000 or not. Should be 8,000. So it is given in the question itself. So this is what finished stock. By finished product account 8,000, and then here only in value only you have to arrive at the balancing figure 36,000 36,309 minus 720 minus 1,203. So use the calculator. You may be arriving at 34,386. So 34,386 divided by 8,000, 4 rupees 30 paisa is the cost per unit. Okay. So finished product. So 8,000 units at rupees 4 rupees 30 paisa each. The value is 34,386. 8,000 units at rupees 4 rupees 30 paisa each. The final value is 34,386. Just take the screenshot of this. It's very easy only. First thing, whatever the information they have given in the question, that you have to fill it. After then, you have to calculate the value of abnormal loss, and then you have to calculate the normal cost of normal output in units, units of abnormal loss. Accordingly, you have to put it here, and then you have to balance. Final balancing figure will be by finished product account or the subsequent process account, but it cannot be construed as the balancing figure. So you are just arriving at the balance. That's now normal wastage account. Process account we have prepared. Now we are going to prepare the normal wastage account. The same format only you have to put. So here, uh, where the normal loss account have been made an entry in the process is at account. In credit side of the process is at account by normal loss account, right? So in the opposite side, you are opening the normal loss account. Normal wastage account means normal loss account. In the same information, 720 unit at rupees 1 each, rupees 720. Okay. So you have to make the posting as to process Z account in the debit side of the normal loss account. 720 units, cost per unit 1, amount 7. Okay. And then in the credit side of the normal wastage account, you have to because you have sold at the scrap value, right? So here you have sold at the scrap value. While you are selling at the scrap value, you have received cash. Debit what comes in? Cash comes in. Cash account debtor to normal loss account. Okay, cash account debtor. When you are selling at the scrap value means the entry will be cash account debtor to normal loss account. So in the credit side of the normal loss account, so you are making the posting entry as by cash account within bracket scrap value. It shows that you sold at the scrap value. So 720 units at rupees 1 each, 720 rupees. That's all. Both sides got tallied. Please take a screenshot of this. Fine. This is one of the very important problem you can expect in the examination. Whatever the problems that we have seen for the past 2 days, all the problems are important problems. You can strongly expect in the examination. This is also one of the important 10 marks problems, which comprises of normal and abnormal loss. Okay. See the question. From the following particulars, prepare process X account showing cost per ton of output. Material 1000. Cost of material per ton rupees 125. Wages 28,000 rupees. Manufacturing expenses 8,000. Output in tons 830. Normally 5% of the weight is lost in the process and 10% is scrap, which realizes rupees 80 rupees per ton. There was no stock or work in progress. So it's very important problem. Just take the screenshot of this question. Now we are going to calculate the process X account. We are going to open the process X account. Now the same. In the previous problems we have seen units and then quantity, kgs. So this is tons, cost per ton, amount. Tons, cost per ton, amounts. Okay. That is what is the difference. It's not much different. Now, to materials in tons, that is input, 1000. Cost per ton, 125. 1000 into 125, 1,25,000. And then to wages, so 28,000 in the amount column. To manufacturing expenses, 8,000 in the amount column. So I think debit side working got over. Output in ton means that is the that finished stock unit. Okay, that is the finished stock unit. Output ton 830 is nothing but finished stock units. We will discuss. Now, see the question. Normally, 5% of the weight is lost in the process and 10% is scrap, which realizes rupees 80 per ton. Now, 5% of the weight is lost in process, normal loss. So, while you are transferring from one place to another, so uh, in the movement in transit, so 5% of the quantity have been lost. So that this may occur in the normal course of business only. That is what it is called as normal loss. By loss in weight, 1000 into 5% in tons 50. But here they have not mentioned anything about the scrap and all. So cost per ton will become nil, and then amount column also will be nil. And then 10% is scrap, which realizes rupees 80 per ton. The next one only. By normal loss, 1000 into 10% at rupees 80 per ton. 1000 into 10%, 100 should have to be put in the tons column, and then 80. 100 into 80, 8,000. Hope I made you clear. After then, normal loss comes to an end. The next one here is by abnormal loss. By abnormal loss, here formula for abnormal loss, same. Value of abnormal loss you have to calculate. The normal cost of normal output divided by normal output into units of abnormal loss. Normal cost of normal output is equal to expenditure of the process minus scrap value of normal loss. That is debit side of the process account minus scrap value of the normal loss. Here, what is the debit side of the process account? 1,61,000 minus what is the scrap value of the normal loss here? Scrap value means this 8,000. 1,61,000 minus 8,000, 1,53,000. Normal output in units, input units minus normal loss units. So now input units means this 1,000, okay, minus normal loss unit means please don't take only this 100 into the consideration. Mistake student may bound to do mistake in the examination. So normal loss units means not only this 100, it comprises of, see, this both, that is 50 plus 100, that is 150 is the normal loss units. Okay, 1,000 minus 150, 850. Okay, abnormal loss units. So here abnormal loss units formula is normal output minus actual output. Normal output already you have calculated, that is 850 units. Okay, what is the actual output? What they have given in the question, 830 is the actual output. Okay, finished stock units. That is what is the actual output. 20 units. Now you substitute. Okay, whatever you have calculated, you substitute. Normal cost of normal output 1,53,000 divided by normal output 850 into 20. So you will be arriving at, use the calculator and check, you will be arriving at rupees 3,600. Understood? That is what is the value of abnormal loss. So by normal loss account in tons column, rupees 20 you have to put, and then in the value column, rupees 3,600, whatever we have worked out, that we have to put. Now cost per ton is 3,600 minus, divided by 3,600 divided by 20. That is 180. Understood? Now, still, you see, 1,000 and then Here, same 1000 you have to put. You see, 50 plus 100, 150 plus 20, 170. 1000 minus 170, 830. Okay. And then here 1,25,000 plus 28,000, 1,53,000 plus 8,000, 1,61,000 minus this 8,000 plus 3,600. 1,49,400. So finished product you have transferred the balance amount to the finished product 830 tons at rupees 180 each for the value 1,49,400. Okay, like this you put it in the bracket. Just a moment. Transfer of 830 tons at rupee 180 each for rupees 1,49,400. Like this, you have to write it within the brackets. Okay. Final answer. The next session, we are going to discuss about the abnormal yield. Just take a screenshot of this. Patiently listen the video. If you have any doubt, means you put it in the ask the doubt in the comments box. Whatever the problems I have given for you to practice, you can practice the problem. You can take the book and then you can practice the problems. If you have any doubt, means you can raise the question in the comment box. Kindly view the video fully, patiently, with 100% dedication and devotion, commitment. Then subscribe my channel. I will do more videos in future as and when it is required. So in the next video, we are going to discuss about the abnormal gain. There is no much difference between the abnormal loss and the abnormal gain. So we will discuss in the next video. Thank you for your cooperation.